A lot of people are greenlit for 2025. The space is as de-risked as ever. That means a lot of capital's coming, and there's going to be plenty of times to get shaken out along the way, like most recently. But like, I don't know, the price action matters so much less than the fundamental drivers in the space today. It's a really exciting time.
This episode is sponsored by Scale. Scale has differentiated itself from other layer ones by offering users a network of gas-free, interoperable EVM L1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. To learn more about the gas-free architecture and growth of the Scale ecosystem, visit the Scale Research Hub at scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey, welcome back to another episode of OX Research. Today, I'm joined by a lineup of analysts from the research team. We've got Luke, Ryan, and Carlos today. How are you guys doing? I know the market situation might look a little red and bleak today or yesterday. Any general thoughts or takeaways at the moment from you guys?
Yeah, I like lower prices. Lower prices are better prices. Temporarily lower prices, but they're generally better.
Yeah, we've seen a vertical move since the election, 7 or so green weeks without much consolidation. So I'm ultimately just looking for a higher low and an uptrend, maybe sideways for 2 to 4 weeks, but optimistic for price action in 2025.
You saw that, like, I'm not a technical analysis guy, but if you throw a Bollinger Band on Bitcoin, like, it was way outside of the 2 standard deviation line for a while there. Done some quant stuff in the past where, like, I think in TradFi, like, NASDAQ never spent 5 days outside of that band. And I think Bitcoin was a few days out of it. And just like looking back on the historical chart, strength measured from that perspective was quite high, even given the crazy stuff that Bitcoin has done in the past. So, like, it's got to happen. Enjoy it. It's what we signed up for.
Love it. I think gonna agree here as well. Remain generally optimistic, bullish, and excited about an oncoming administration that is very pro crypto from what we're seeing across the board in all in all appointments and all activities, even WorldFi being built out. So going to jump on from we're not going to talk too much about the market today. Instead, I think, coming up on the end of the year, we want to look ahead to 2025. 2024 has been a great year actually for crypto. I think lots of metrics for a lot of top protocols, chains, different categories have kind of spawned and exploded. So want to look ahead and kind of go down the line and get from everyone like some top ideas and theses going into 2025, whether they're contrarian, whether they're, we think what the next big thing is coming. Want the listeners to know kind of what we're thinking going into the new year. Ryan, if you want to start us out.
Yeah. So, yeah, we're going to write a piece. Every Blockworks analyst is kind of like putting pen to paper on like one or two ideas that they think are like most top of mind for next year. Some contrarian, some not. Not everything needs to be contrarian, just like what trends matter, right? And I think that, one of the I have two that are top of mind. I guess we'll start like with the one from that's a little bit more familiar on the DeFi side. I think 2025 is the year that multi-product DeFi really like wipes the floor with single product DeFi. I think single product DeFi is a thing of the past. Now that we have the green light on meaningful capital coming into the space on the US, or maybe like the yellow light, but more or less the green light coming to that capital, I think that capital is going to flow to things that are kind of like backwards compatible with what people are used to. And I think that, multi product DeFi has a number of characteristics that really just like naturally makes sense, and that will just like naturally give it market share. Um, the first is that like I think DeFi protocols and DeFi users naturally benefit from increasing wallet share. On the protocol side, you get to cross sell. It just makes sense. And then on the user side, like they're used to being cross sold too, right? So if you like think of your banking relationship, like you don't have a checking account one place and like a savings account another place and an investment account somewhere else. Like you typically do it all in one spot. You do your private wealth, you do your banking, you get a mortgage, whatever. Like it's there are synergies between those products. They should all happen in one place, more or less. Um, and then just like these things enable capital efficiency. Like you have this weird DeFi landscape where if you want to margin something on like Hyperliquid, you can only do it with your assets that are in Hyperliquid, and that's incredibly capital inefficient. Like we should start bundling these protocols together to give users capital efficiency, and frankly, institutional customers are going to start demanding that. So you're already starting to see it. I think that's starting to take place. Like Aave is moving into stablecoins. Drift has a bunch of products that it's bundling together and doing cross margin on. So like that kind of like the writings on the wall, and I think that accelerates in 2025.
I think I would agree with that. We've seen, especially in the lending vertical, that I can think about. Like in Solana, you can see Camino. They built a lot of products on top of like their money market. They released like the long short product for spot leverage. They have their multipliables like for leveraging up and looping like LSTs, and now they release like their AMM, and like you've seen that in other ecosystems as well. Like I recently wrote a flash note on Sweeland, and I think it's very interesting. Like they start with one product like the money market, but then they release products that are tightly integrated with that money market to create a growth flywheel. So like Suiland, for example, released like the uh, Spring Sui standard for LSTs with instant on staking, and they released their own LST. So that LST by Suiland, like as it grows, like it is deposited into the money market and creates like a flywheel for both products. And now they'll release an AMM that will also like go back to the money market and create like this virtuous cycle that creates like growth. And as you say, Ryan, like it's not just one product that is isolated from the rest, but like people can have all of their assets like in one specific platform, which is a more capital efficient and has better like UX.
Yeah, I'm going to give a thumbs up here as well on a related category, like in lending. I think we're seeing as well. A lot of teams have been going after this new design, like Morpho, Euler, Camino. New versions are going after like this sort of vault aggregated product design, where really the intention is to enable, like potentially if it's experts or other protocols, to just ad hoc create these like products, vault products that they can incorporate directly into their own protocols. We're seeing this with Moonwell leveraging Morpho. I know Sky and the Spark DAO as well, and I would expect to like just see that generally grow as we've seen this category kind of they're sort of starting to adopt and trend in this direction. I would expect to see more protocols kind of latch onto that and build out products on top of these things.
Do you think that any one ecosystem is doing more of this than another? It seems like Solana's ecosystem teams are pretty focused on this. Like they have a lot of teams that are doing it. Where like I know like maybe Sui might be a little too early to say, but Suiland's a good example. I feel like the ETH folks are a little slow to move in that direction, or have been historically.
Yeah, I would say that does like the sort of historical giants in ETH do seem to have like captured their kind of dominant position and for a long time sort of remained at that spot without going after this approach. But I would generally agree that like we've seen Jupiter and Camino and others like in Jito. I think you can really list off basically any of the top projects at this point that are looking at multiple products, multiple verticals. Um, I think just something that maybe they realized early from looking back at kind of the history of ETH and where we're at today, that this is sort of a natural evolution for things.
Yeah, I think within the EVM landscape, you're seeing more applications basically extend integrations or composability to products offered by other applications, such as like listing a Pendle principal token market to be able to loop that. We don't really see money markets trying to offer that product themselves. But as you called out, Ryan, looking at the Solana DeFi suite, and as Carlos highlighted as well, like Camino certainly seems to be doing a number of different all-in-one offerings. Like they offer the liquidity product for automated rebalancing on a concentrated LP position. Then you can borrow against that on the money market. You can take the Jupiter LP position for their perpetual futures protocol and borrow against that on the money market, or multiply it through the multiply product. And I think those offerings, kind of all in one on Camino, definitely kind of extend the total addressable market that they can offer their products to.
I think kind of like writings on the wall here. I wouldn't say this is too contrarian. Maybe the degree to which I think it's going to happen perhaps is contrarian. I think you're seeing these AI agent like meme coins or creator, let's call them creator coins, like Cerebro and AI16Z, and you know, I don't want to say others because they're too small cap, but like there's a bunch of really interesting stuff out there. Um, these things are like these teams are creating music, creating art, creating videos, and like parlaying that attention with a token, which I think is really powerful. And I think is going to kind of catapult perhaps a few of these names into like mainstream consciousness. If you look at Instagram today, there are multiple influencers that are completely AI generated with hundreds of thousands of followers that are generating real revenue for the teams that are behind them. And it will not surprise me if a handful of these influencers, with armed with tokens to get that extra attention from folks, are catapulted to like top influencer positions in 2025 and start to make other influencers think about like how they're approaching the market. Like, to me, these influencers are just much more scalable than a human, right? They can work when others aren't working. They don't get tired. They're higher margin inherently, um, and they can better adapt towards to shifting trends in attention. So if you think of like Facebook's ads algorithms, right? Like they look more like that than a human does. They can very quickly adapt to what's top of mind and stay relevant. So, armed with a token, which we're realizing with things like Farcoin, um, can really catapult something into the mainstream. It won't be a surprise to me if like you see some top creators in 2025 coming directly from the crypto space.
Yeah, I second that. This is definitely something I expect to continue to grow notably in 2025. And I kind of see AI agents basically accelerating their capital formation through the utilization of on chain rails. The Truth Terminal Solana account has received over $40 million in tokens. Of course, the account wasn't purchasing these on chain, but rather they were sent to the account from the public. Cerebro as well, north of 10 million in tokens, and countless other examples of agents becoming capitalized in aggregate north of $1 billion. I don't know yet what vertical, whether it's content creation or perhaps on chain algorithmic trading, might be the most lucrative endeavor for the agents. At large, it's clear that these agents can raise a tremendous amount of capital incredibly quickly. And I think this will ultimately look like the most productive agents being able to generate some return on that capital through some action, whether that's content creation or you name it. So I think like the rails clearly eliminate much of the frictions and latencies associated with the legacy capital formation process. And as a lot of these tokens have blown up, it's going to be increasingly evident to AI development talent what the incentives are for building in the on-chain space. And as more of these sophisticated agents get shipped, I think the most productive ones will be able to generate a return on a large amount of capital. And I think that can be highly disruptive.
One thing that I do think is interesting to point out is that we're basically having like a bit of an ICO moment again, where like these AI teams, essentially, developers have they sort of co-opted the meme coin, pump fund launchpad rails into, a means to raise capital and then, build out products and develop these things. Which I think is it's interesting. And like you're saying, Luke, it removes all of that complexity of like, let's say you're going to do an AI startup and raise money the traditional route. Like there's a lot more that needs to go on there to sort of get to that point, raise funding, hire some people, kind of build out the actual product. We've dramatically reduced that time period here to where somebody, if it's a prominent, AI agentic researcher, et cetera, they can get their idea out there, raise some capital, and just go after it very quickly. And in terms of like where we see these things going, what I do think is interesting is if we look at, sort of like AI generated slop content that gets spat out on like Facebook and other platforms for, I would say probably the older generations who maybe can't or don't really are not really quite as in tune with the tech and the culture today as maybe younger generations would be. They're maybe not differentiating that stuff from just like other memes that might get posted. I think as these models and like as the tech gets more mature, like we might see that sort of age decline in terms of who is, if you want to call it, being fooled or like just enjoys the content that these things are creating as it gets more and more sophisticated. Obviously, like people are rallying behind some of these personalities today, right? Like, Truth Terminal, Cerebro, they've dropped albums on Spotify, and this like cult community is interested in that. But like probably the expectation more broadly is that as the models and the technology get more like more capable and also more integrated with different, if it's apps or platforms, we can see that sort of like general audience appeal grow, and go from obvious like crappy generated art to like, wow, this is a really cool like video I just watched and it was entirely AI generated and the user has no idea.
Can we take I wanted to ask a question on something that Luke said earlier. Of all the capital these tokens are raising, or like AS16Z and Cerebro, or like how are they doing that? Are they asking for it, or people are just sending them tokens and they've effectively like made these AI agents like millionaires?
It's the latter. You can check the Truth Terminal account activity on SoulScan and see that these tokens were sent to the address from the public, and the account isn't transacting on chain to initiate the launch or purchase the tokens. Um,
So that's probably coming next then.
so
Like,
it's
I'll say there's a parallel here that I think is interesting is that it reminds me, it's like reminiscent of 2021 when, SHIB and other coins would send a billion tokens to Vitalik, like a prominent figure. Now we're having the same thing, but it's like sending your meme coin to the AI agent personality and seeing what happens.
One thing that I find interesting is that in contrast to like static memes like Sheev, With, or whatever, like these AI agents have a ton of execution risk. Like you look at Cerebro, you look at Truth Terminal, now there's an expectation that they deliver content and that every time they get better and better. And if they don't meet these expectations, like it's clear like execution risk like for the project, and it may not bode well for the token. Whereas you look at things like Fartcoin, where there's literally no execution risk, it's just like a meme, and it has done a lot better like recently. And I think that's part of it, right? Like you don't have as many expectations from the token, like it just is, and like it's just a meme, right? Whereas with AI agents, like you have certain expectations that you need to fulfill.
Yeah, there's totally execution risk, but I feel like there's like I feel like the market is bigger for the AI agent coins than pure meme coins. Like I think the Amson like framework, like obviously like he's had done a great job of at everything this cycle. I have to say that first and foremost. But I think like in hindsight, like think like betting on whiff to be the thing that people buy when they onboard, like it is a silly concept that you're just buying a coin that does nothing. Um, and especially it's like, why am I buying the dog with the hat where I could buy a portion of this cool new AI agent thing and I can potentially like it looks more like a stock, right? Which I think is familiar to people. They feel like they're participating in the economic upside. And, perhaps that TAM is bigger than the I want to buy the funny picture because other people are buying the funny picture. I probably agreed with Ansem going into this, but now seeing what these AI agent coins can do, like I think the meta is kind of shifting.
I would agree with that. The only thing I would say is like the game becomes a lot more. It's a lot harder, right? Because you need to pick something. Like you need to bet on the team basically, and you need to know that they are able to execute. It's not as simple as like the dog has a hat anymore, right? You need to have a thesis of what that AI agent will do in the future that will basically gather more attention and and make the token like do well, basically.
Yeah, it also makes me bearish on the launchpad idea. Just that it's so you need a team with AI expertise and like a strategy. You need to go to market.
I think the dynamic agent instruments do carry more execution risk, but concurrently carry more potential upside as well through the ability to generate a return on whatever capital they're able to raise. Like looking at Cerebro, I've now scrolling through Instagram have seen accounts with absolutely no relation to crypto or artificial intelligence, like fill in a reel with audio of a Cerebro track. And like to the extent the content can escape the silo of like just the AI or crypto industry, there's a lot of upside for it's like mass market products or content that can ultimately like to the most productive AI be able to generate a return back to whatever token. So
I will say there is an interesting maybe point here to be made that like if we're talking about these AI agent teams that are specifically going the content route, while there may not be execution risk to like a dog with hat and there is to the agent, they do both fundamentally rely on like this growth of attention. Fun, right? If the goal of the agent is to produce like meaningful content that people want to watch and then earn revenues on the basis of like, song plays or, watches on YouTube and ad rev, you are coming down to this same fundamental thing of needing to drive attention to this thing. Obviously that can be, it might be a bit different, right? If you're continuously able to put out new and evolving and interactive content, that's a bit different than like one static image, like's been mentioned. But kind of fundamentally, there is this similar theme that they're both going after attention kind of in the whether it's the short term or in the longer term. Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, Skale. Skale is built different. Unlike other layer ones, Skale is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. Skale operates like the AWS infrastructure model where developers pay for space in the network in SKL tokens to validators. Essentially, Skale has chain fees and not gas fees. This allows for free transactions on Skale and has saved 46 million users over $9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Skale Network. Visit the Skale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupiter, Edge has already secured $30 billion in volume and more than 60% of all Solana perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode. Carlos, do you want to jump in with your key thesis for 25?
Sure. So my thesis is basically, it's not contrarian, I will say. It's more a momentum thesis. And I think Ethena continues to do very well in 2025. Like, assuming the bull market continues, historically, funding rates and open interest have been high during these periods. And I think like USD is just meant and built for this type of conditions. uh, since October, like the supply of USD has more than doubled. I believe in that it's now like at 6 billion, and I think Athena has a chance like at eating market share from Tether and Circle in the coming year. And I think that has second order effects on the ecosystem, particularly in the money markets. You've seen things like Pendle and Aave like grow in deposits by quite a lot, and stable utilization rates rise a lot, and that rises interest rates basically. And I think that bodes well for other protocols that people are not seeing. And I'm thinking about Morpho in particular in the lending landscape. The thing with Aave is that as utilization rates drive up, I think that because it has like just a multi-asset lending pool, like rates will be very high for spot leverage positions, whereas Morpho has more like a modular approach where they have separate markets for separate like risk profiles. So like you can have very high lending rates on the Athena pool, let's just say, but then you can have lower rates for like just opening along on Ethereum. And so I think like Morpho will keep eating market share from Aave. Maybe like obviously not flip it, but I think like in the past year it has grown like over 200x in TVL, and I think like it will continue to do very well and get some market share from Aave. I don't know what you guys think.
Yeah, I would agree with that outlook. Um, the growth in Morpho's KPIs against Aave are definitely a compelling momentum trend that I'd expect to continue. Just the capital efficiency you can get with the modular market lending architecture is improved. And watching this industry long enough, like it's clear every single incumbent can ultimately get disrupted through a better product with better tech and better innovation. SUSDE has been an incredible product, offering pretty attractive APYs. Of course, a lot of that is downstream of current market conditions and the elevated demand for leverage. We've seen higher funding rates. We've seen higher open interest during a bull market. So I think there's still upside there for the USDE supply. Then if we think of the downstream effects for DeFi, like as you called out, Pendle has been huge beneficiary of the growth in USDE. PT and YT products are very compelling instruments to get long or short exposure to the underlying on SUSDE. And then think of downstream of Pendle, integrations with money markets like Aave, or Morpho. Morpho beat Aave to the punch for listing SUSDE PTs, and that has been particularly good market for them. Aave has a proposal to list that market, but Morpho beat them to it. So yeah, I would agree with Carlos's outlook.
How much do you think that listings matter to the lenders?
A good amount. If we think of like this SUSDE strategy on money markets, for Aave, they added about a billion in SUSDE in just under a month. So there's huge interest for suppliers to deposit that collateral type that's carrying, call it 27% APY, and borrow stables against it at 10 to 15 and perhaps loop that strategy. Then if we think of like the edge that using an SUSDE principal token from Pendle can offer is you're basically going to get a fixed yield to maturity for borrowing against that instrument and looping it. Whereas on the Aave market right now, your collateral asset side is going to be paying you a variable APY. So you have both legs of your looping strategy, basically paying a variable rate. If you can take one leg of that strategy and have it be paying a fixed rate, I think it can basically de-risk utilization of that instrument.
Maybe a related question. I would ponder, like, do we see a point here? Is Aave going to be forced to tip their hand and adopt a similar design and go after this modular, like, lending vault system as well? Because I think, having just looked at Morpho myself and put out a report recently, it's their deposit growth has just been like straight line up only over the past year. Clearly, like, it's a great design, and like risk curators and experts and risk advisory firms have jumped on to, like, I mean, that's it's a great opportunity for them to, like, build their businesses and earn performance fees for building out vaults.
Like, I think there will like adopt a similar approach. What I would say is like it's harder for them to do so because they are so mature now. And so they have like 20 plus billion in TVL, and they have that deployed across multiple ecosystems. It's not like just one deployment like on Ethereum mainnet. They are in multiple chains. So I think like technically it's a lot harder for them to do so, and there's a lot higher risk because they have a lot more TVL at stake.
Yeah, there's more, I guess, technical debt in Aave's current implementation that's kind of going to be a barrier to ship the same functionality that Morpho can offer right now. That being said, like Aave is working in this modular direction through something like the Lido Prime instance, but then also the sort of markets they're going to ship with the V4 upgrade. But given the current implementation and both like the size of the project, the number of downstream dependencies, and just the nature of DAO governance and development, um, they may not be able to move at the velocity they need to remain competitive against um, Morpho's current offering. So I mean, Aave has an incredible moat in terms of the absolute value of deposits and borrows within the ecosystem. Um, but ultimately, like capital efficiency matters, and right now that's Morpho's edge. So I'm unsure if Morpho can or will flip Aave, but it is a contender.
Over what time frame? If you think that Morpho could flip Aave, could it be this cycle?
I would say no, um, given both just like the current lead, um, and also how long I think like the cycle is going to last. Do I think it happens within a year, which is kind of my outlook for the rest of the cycle? That might be too much too quick, but on a long enough time horizon, like 2 to 5 years, I definitely think it matters. During the bear market of 2022, there was a time where MakerDAO was the largest lender through the DAI supply compared to Aave. What we've seen since the start of the bull is Aave's supply of deposits and total borrows has outpaced all of Maker's KPIs on those metrics by hundreds of percent. So it can happen.
You heard it here first. Morpho flips Aave.
Luke's calling it in the next bear market. All right, I like it. Luke, do you want to jump into what are your other big calls for 2025?
Yeah, so this one is similar to Carlos's idea about the USDE supply, but I think we have an incredibly positive context right now for continued growth in the aggregate stablecoin supply. which has just recently eclipsed 200 billion. But across the board, there are so many on-chain venues and products for stablecoins, whether it's secured lending, looping, SUSDE, that these positions are paying very elevated yields, whether it's 10 to 40% on a stablecoin position that is secured lending on an on-chain money market or something like that, and that's a really compelling risk premium on delta's equivalent to a dollar position that's well in excess of the 4.5% federal funds rate that could drop further from here. So long as there's this huge spread to that risk-free rate, I think there's a very compelling incentive for a lot of money that is currently in TradFi to become interested in these on-chain products, given the risk premium. And as that money flows in, the aggregate stablecoin supply can grow notably from here. I've seen some figures thrown out that we hit 500 billion on the aggregate stablecoin supply. I may not be that bullish for 2025. I think 300 billion is definitely in play, particularly given the current context of elevated yields. But then on a much longer time horizon, thinking 5 to 10 years, I would expect trillions in the aggregate stablecoin supply. And there's no better backdrop to move in that direction than the fact that you're getting paid handsomely on those deposits, and for bringing that money on chain. So that's my outlook for stablecoins for 2025.
What do you think are like the downstream impacts? Like what apps benefit from that? If you were to make some longer tail investments um, to take advantage of that meaningful increase in on-chain stables.
Yeah, so Circle and therefore like Coinbase's I think 50% stake in Circle is one example of that. But of course, like Circle is clipping a large margin right now that is then many other projects opportunity to eat into. So as Carlos highlighted, like Athena's SUSDE with a much better yield can certainly eat into that market share. Then also, as you see, if you were to see the aggregate stablecoin supply grow, that could be more deposits into the on-chain ecosystem and money markets, Aave, Camino, and Morpho. I would highlight in particular. So as deposits and borrows in particular grow on those money markets, the money markets get to clip a take rate on a growing borrow base that is now currently paying elevated APYs. And both Aave and Camino put in their highest revenue generating month this past month in November. And yeah, I think they certainly stand to benefit.
How do you guys think about like beneficiaries in terms of chains? Because historically, like Ethereum has had the majority of stable coins in circulation. Like if you think that stable coins grow to trillions of dollars in value, do you think that stays that way? Like Ethereum mainnet keeping the majority of liquidity, let's just say? Or do you think like Solana with Camino has a chance like to finally scale in terms of like stable coins in circulation? Because historically it's been really hard for like Solana to have a lot of stables. Like I think Arbitrum and Base have more stable coins than Solana, which like to me is kind of baffling. I don't know how you think about that sort of growth in terms of like chains or what needs to be done like to get there.
I definitely have a fast chain bias that I think a lot of fast chains with high throughput, low latency, low transaction fees will continue to gain market share against the Ethereum layer one. How it relates to like stable coins in particular, I think is more important for like a high volume use case, whether that's going to be payments or DEX activity that's denominated in stablecoins. But as it relates to money markets, I think that differentiator is less important when you might just have one transaction that's either a deposit or a borrow, and then you then hold that position for a high time frame, weeks or months. In that case, the latency, throughput, block time, median transaction fee is much less important.
Yeah, I think I want to caveat like when you adjust base's stablecoin balance for what they simply hold on the exchange. So if you go to like base scan and you look at the top holders of USDC, there are like 20 accounts with 101 million USDC in it, and it's all just like sitting there. It's just like a Coinbase inventory. So when you adjust for that, and when you adjust Arbitrum for hyperliquid USDC, I think that I think Solana might be second in stablecoins to BNB and ETH. So I don't think the picture
Tron.
is and Tron, of course, yeah. So I don't think that it says it's somewhat surprising that Solana stablecoin activity is, or sorry, balance, the balance of stablecoins on the chain is as low as it is. But I think when you make those critical adjustments, it looks much better on a relative basis. And I think also in terms of like stablecoin transfer volume, like you see it on the series on Artemis. There was a huge like Solana had the lead in stablecoin transfer volume. That was actually due to that exchange Phoenix and market makers canceling then posting market orders again. I think they've adjusted for that, and I think it's only second to ETH on the chains that they track. And I don't know if they track Tron. So I don't think it's as bleak, but I do think like there's a lot of progress to be made on Solana.
Yeah, I guess what I would reflect is that I would expect to see outsized growth in the ecosystems where the opportunities are. So, if activity, I mean, Solana stablecoins have grown quite a bit. I think over the prior, year and a half, probably, I think maybe 3x from the lows of 22, 23, which is fairly significant. If you look at Ethereum, it's maybe up from 60 billion to the 100 some billion range. So the growth has been there, but it's just the relative total size is just starting from a much, much lower point. But I think if the activity continues to happen in these particular ecosystems, if it's lots of activity on Solana, lots of activity on Base, that drives up rates for supplying stables because of demand for leverage or demand for the stables themselves. Like I do think there's some natural tendency that those will grow. It's looking out 5-10 years, it's going to be really hard to bet on which specific chains those are going to be. We could see so many things disrupted in that time, but despite what Ryan says about if you discount some of the base stables, it would not be surprising to see some of these platforms like Kraken as well has just launched their L2 Inc. I wouldn't be surprised to see other exchanges like at some point perhaps we see a Robinhood L2 or chain affiliation, and maybe others, and to basically direct their users on chain through their either their affiliated chain or like their preferred kind of destination. I would expect to see stablecoins grow on a relative basis much much quicker in these locations versus if people really aren't performing activities on ETH outside of the capital that's just sort of been there since last cycle.
Yeah, I think stables on ETH is just a result of path dependency and just like exchanges having a bunch of them, right? Like there's just like volume that gets cleared on ETH because there's a lot of ETH tokens and they have $1 billion valuations and they trade a bunch. That changes over time. It's it's not one of my favorite indicators, to be honest. Stable coins, like I understand that it's important. I understand it could be a signal of like it could be a signal of mass adoption. I don't think it is today because I don't think anyone's really doing payments. I think it's just like risk managers who want to hold like risk, who want to like bring risk to zero on chain. And I don't expect a lot of these chains to have large stablecoin balances because I feel like once you like you park your cash balance like not on chain functionally as an asset manager. Like you don't want to have smart contract risk. You could probably like with your brokers just like flip into a money market and not have to own the stable. Um, so I think it'll be a function of on-chain risk managers more so than payments. And I just that really hasn't happened in size. Like talking to funds, you like even the more quantitative ones, you think like, oh, they're on chain all the time. Like they're not. Or at least I've been surprised with how much I thought they were on chain compared to like the reality of it. So 2025 that probably changes. 26 that probably changes.
Yeah, I agree with that framing that like if you're a professional money manager, fiat in a bank account is a very different exposure than some on-chain stablecoin position. Um, but like if you're that money manager, if you're going to get paid enough to hold those stablecoins on chain and you're profit maximizing, um, I think that that's the reason to move that fiat on chain and grow the stablecoin supply. Um, if we were seeing uh, Aave's AUSD supply rate at 4%, Ethena at 7, um, and there's no compelling risk premium, I would be not bullish the growth in the aggregate stablecoin supply. But to the extent people are going to get paid on those positions, I think there's enough incentive that it trends up and to the right.
Yeah, the risk reward is compelling, especially during these times when rates really skyrocket due to the other on chain activity. It's a pretty strong point. Now that I think we kind of mentioned, or maybe Luke, I think you mentioned, fast chain good sort of idea there. Um, I think my key takeaway for next year is um, sentiment has been a bit interesting, I think, in regards to maybe some of these upcoming fast chain good deployments. Hyperliquid has been the talk of the town lately. People have been very excited. They love the product. They love the token launch. I think it has somewhat distorted maybe expectations of like all future chains and token launches to come, at least for a period. I think we tend to see the cyclical nature of when the best airdrop ever drops. People get really excited, and then when a poor one follows, they get really disinterested. But I think we've got multiple chains coming up that are more than just like vanilla EVM implementations. The monads, the mega ETHs, and even the bear chains and related coming in 2025, where it seems that the community is maybe discounting some of these a bit, either because they've taken too long to come to market. They're sitting around wondering like, where's the token? I want to bid it up while Bitcoin is above 100K. And maybe some are thinking now like, oh, you were too late, you missed it. Like the bear market's coming. I don't think so, but regardless of that, I think going along this line of dropping meaningful improvements to the sort of the tech stack, the product stack, and bringing like interesting new app deployments to these chains. I'm really interested in like Monad specifically. There are teams going after like some interesting app types, trading on whether that's like leverage sports betting, or going after like interesting ideas in terms of like attention markets, like trading social media activity. So, making, a bet on whether a particular influencer or video might gain or lose in attention over coming weeks. Um, just having these like faster EVM sort of implementations, similar to what Base is trying to do in growing the throughput and scale of the chain, to enable, Mega ETH calls it closer to real time blockchain. I don't know if we'll get to like what is theoretically a real time blockchain, but regardless of that, opening up like higher scale applications for if it's social apps, which people have talked about for years now. Friend Tech flopped, and we've been kind of hoping for the next one. Pump Fun has maybe filled that void for the time being. They're going to open up opportunities for exciting new apps, and there's some of interest. And then the other one is, even if the tokens themselves do not pull off a hype level performance, post launch, opportunities for incentivization if it's farming new native protocol tokens, just incentivize liquidity rewards. I think Luke, you had a recent report on SWE. And after Deep Books, Deep Token launched, there were incredibly high, like multi-100% pools to farm with, deep in SWE or deep in stablecoins, etc. They open up just interesting strategies for capital to come on chain, and whether it's arb it out or just farm delta neutral and capture some free income for the time being. Either way, I think that these will inevitably draw attention and take some mind share, and the hot ball of money will at the very least give it a rotation, if not be excited by new apps and new opportunities.
Yeah, I think there's demand in the market on the dev side. Spoke mostly about the consumer side, but on the dev side, I think that there's pent up demand in the market for a highly scalable integrated EVM. I think too, the interesting thing about Bera and Monad that is not going to be, or that wasn't true about Aptos and Sui, is that I think they're going to have a bunch of things to do on day one. And I think that I'm not an expert on how they're dropping tokens to the communities, but they do have like large pre-established communities. Like going to Singapore, like I met at not Berachain events, a bunch of people building and very like part of that community, the Berachain community. So like they have a bunch of people ready to go, which I think we haven't seen historically. So be interesting to see what happens. In the end, it's a long game, but I think these guys will be a little faster out the gate than chains have been historically.
I do think if I had to call out a risk to these ecosystems, it's the kind of time to deploy apps, following mainnet launch. I would agree that like the feeling that I get today is there's sort of an expectation that there will be a wide range of applications available on mainnet day one, if not day zero. And if that's true, it is like fundamentally different from what we've seen historically. Like even Base was, a bridge. You could get ETH onto the chain, and people, quickly spun up, bald meme coins and got rugged on them. But there wasn't really anything to do. It took a few months to really get things going, to get apps deployed and for stuff to do. So this might be one of the first times where we see a chain potentially with, an ecosystem of apps to use day one. And if that's not the case, then that would be like a serious execution risk, because you can't sit around for months with nothing to do, when I think, like maybe Luke mentioned, people are thinking that the bull market is kind of drawing near to its end potentially.
Yeah, I think every new ecosystem will have its new projects that, particularly a hyper performant EVM, will be able to have deployed at Genesis, better than something like Sui or Aptos would have at Genesis. So I think a lot of these projects will have tokens and they'll have juiced farming opportunities. And in my opinion, airdrop farming is my favorite game in crypto. And I think there's going to be a lot of interested money that will be wanting to play that game on these new ecosystems.
Totally agree. Well, I think we've been all around the horn here. Anyone have any big final thoughts or takeaways before this episode closes out the year?
I think it's tough to make macro predictions, but I think 2025, a lot of people are greenlit for 2025. The space is as de-risked as ever. That means a lot of capital's coming. And there's going to be plenty of times to get shaken out along the way, like most recently. But like, I don't know, the price action matters so much less than the fundamental drivers in the space today. It's a really exciting time. So see you in 25.
Love it. We'll call it there. Thanks for coming on, guys, and we will see you all next time in the new year. Thanks again to Skale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Skale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network, and visit the Skale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.